All right, we cool? Let's do this thing. Hello, everybody, and welcome to another edition of the Alliance Group podcast. And we have Mr. Brent Mott, all the way from San Antonio, Texas, Bowtie Capital, a 39-year-old real estate investor, real estate coach, a self-described world-class financial nerd, and an infinite banking expert, which is what we are going to discuss today. Brent Mott, thank you so much for joining us on the podcast.
My pleasure. Thank you for having me.
So you have described yourself as a world-class financial nerd. You've always been studying everything money related. You've read all the books. You've been a real estate investor for a long time. You're a very successful real estate coach. But something that you've been very interested in over the past many years is this idea of infinite banking.
Yeah, absolutely. So, you study what you want more of in life. So, I study health, I study happiness, I study love, I study wealth. And in learning about what do the most successful and what do the wealthiest people on the planet do, well, they invest in real estate. And they use life insurance. So that is a huge quality. And as you go through and you start reading all the books on finance, you start off with the basics with Robert Kiyosaki, Rich Dad, Poor Dad.
Think and Grow
Rich. Yeah, all of the basics. And then you get to this weird fringe of the internet, I guess. Not that weird of a fringe of the internet.
You're reading all these books and then you run out of all the basics, right? And then you're like, what's next? And so you start getting into these niches, and then your social media feed picks up that you're looking for these things, and then you start getting fed some of these niche things, right?
Exactly. So, and then, as you're getting more into all of this, you start to hear, the rich man's Roth. You hear all of this bank on yourself, infinite banking, and you want to think, what is that? Where does that come from? And how do I utilize that?
Right.
One of the first times that I ever heard about it was in one of Tony Robbins' books, and it was one paragraph. And they referred
just
to this
enough to kind of sink
just
that
enough
hook.
to sink that in. And then I started researching it and learning more and more about it, and it's just an incredible. All of the benefits are just incredible. So you have the great life insurance benefits, but then you have all of this extra protection and tax-free growth and all of these other really, really cool benefits that tie into using infinite banking.
So infinite banking, a 5,000-foot view, and this is your first challenge of our podcast today, Brent. It is not a necessarily simple concept, especially to someone who's just hearing about this for the first time. But how can you give us a 5,000-foot view for viewers who maybe are not at all familiar with infinite banking? What is this infinite banking concept, and how does it work?
Yeah, absolutely. So I'm going to say I'm an enthusiast, and you definitely need to make sure that you're working with an agent, with somebody that really, really knows how to set these up first and foremost. I actually work with a partner agent that knows all of the ins and outs and how to do everything completely right.
Jack Waldron from Five Rings Financial. You guys are very close, and he's very, very experienced in this arena.
Exactly. So that's the first thing that you've got to know about this is it has to be done right. This has a lot of people have kind of a negative view on it, and that's because they haven't been set up right. So that's the first thing that I want to say, and we can dive into what that looks like a little bit later. But essentially, what an infinite banking policy is it's a life insurance account. Okay, it's a life insurance account that has a cash value component, and every whole life insurance policy has a cash value component. And essentially, the way that it's normally set up is we have the death benefit.
Right.
This is why most people get life insurance, and it's why people have gotten life insurance for hundreds of years.
Yeah.
I'm a financial nerd. I can tell you about how insurance started with boats. Anyways,
right. Yep, I've heard that story before.
So there's the death benefit,
right,
and then the cash value. That's the way that life insurance is normally set up, because people are focused on how do I take care of my family if something happens to me.
Right.
Well, we have other policies that have different jobs. For these policies, for the infinite banking, you want to have the smallest death benefit you legally can.
Right.
All right. And again, there's complications to that, but work with somebody that knows what they're doing. So
Absolutely.
You want the smallest death benefit you can with as much cash value as you can.
Right.
So what we want to do is we'll overfund for the death benefit the cash value.
Right.
And then that cash value will grow within that account.
Right.
It's not technically an investment vehicle, but it's a way to leverage your money.
Absolutely.
The insurance companies are going to use that money, and they're going to grow that money. Well, you can borrow against that account. Now, it's crucial you're borrowing against the account. You're not borrowing from the account.
Right.
So your cash value stays working in that policy while you take it out and you can do whatever you want to with it. Now,
Right.
I use it for my real estate investments, and I use it essentially as a bank account.
This is a very popular, real estate investors love infinite banking because what you're really describing there is you can establish this this account, and then as soon as it's funded, you can start to leverage that money that stays in the account, continues to earn interest, but you can borrow that money out at a lower interest rate than you're earning, ideally, and then you can take that money and use it for an investment that you're also going to earn a return on. So you're making money through the arbitrage of within the policy, but then ideally you're also spending it on some sort of safe investment with a very high probability of a return. And so that's the magic of this infinite banking scenario.
It's beautiful. Real estate and life insurance are like peanut butter and jelly. They go, and I sound like such a nerd because I get so excited about this. But historically, I can't. Past performance is no indication of future performance.
Right.
Historically, these policies average just over an 8% return. That's the historic. And the interest rate that you can borrow at is typically around 4%. Every policy is different, but that's kind of the basic round numbers that we're looking at.
Sure.
So if you put your money into this account that's earning 8%, which is way better than any other bank account I can think of, and quite frankly has as good, if not better, protection.
Right.
Because life insurance has so much liability protection. It's way stronger than a bank. It's,
right.
Creditors can't go after it. It's incredible how safe it is.
Right. A lot more banks have failed in the past 20 years or so than life insurance companies. That's for sure.
Yeah. So really, really great security at a much better rate than its competitors, if you will. So if I can earn 8%, borrow at 4%, I can borrow that money, go and make a real estate investment. Now, one of my targeted returns that I always look for in my real estate investments is I look for a 14.5% internal rate of return. So if you're familiar with the rule of 72, a 14.4% internal rate of return will double your money over 5 years. So I want to do a little bit better than that. So I'll say 14.5%.
There you go.
Now, it's a higher return than the life insurance, but it's also I'm exposing myself to a little bit more risk. Every investment carries risk.
Right.
I haven't found what the risk is in life insurance yet, but I'm sure
I'm
there's
sure there's
some.
one.
I'm sure there's a risk somewhere in there. But I'm borrowing at 4, earning 8. Okay, so I get that 4% arbitrage for free.
That's just within the policy. Even if you made nothing on the investment in the real estate that you took the money out of, that's 4% right there.
Exactly. And then I take that money, I make the investment, and then most of those investments that I do a lot of commercial real estate syndications. Those pay some cash flow over the source of about 5 years. And then when we sell the asset at the very end, I can take all of that money and pay off that policy loan and then do it again and again and again and again.
Absolutely. And then, the beautiful thing about these infinite banking setups is that after you do that for many, many years, at the end, when you've decided it's time to retire, since it is this cash value life insurance policy, you can turn on an income stream and start getting in some cases, a guaranteed income tax-free from that policy and use it to fund your retirement as well.
It's beautiful. And what I like about it is you mentioned I'm 39. So a normal retirement account, and I'm going to use the term normal like it's this really weird thing because I've been in the entrepreneurial space for so long.
Right.
But a IRA or 401k, I can't touch till I'm 59 and a half. Okay, that's 20 years for me. Now, what's kind of funny, when I started teaching investing, I was 29. So I used to say 30 years, and now time flies, and now I'm 20 years away. But I don't see myself retiring. I'm not wired for it. I love what I do.
Right.
That being said, I want access to my money before I'm 59 and a half. So
Right.
this is why I use the infinite banking policy as a retirement account, essentially.
Right. You don't lock your money up.
Yeah, that's the job that I've assigned to
Mm-hmm.
this account.
Absolutely. And we'll get into, you actually have several life insurance policies that work to do different things. And you do practice what you preach, of course, when it comes to infinite banking as well. We will get into that a little bit later. So let's actually back up for a second. We know what infinite banking is now. Hopefully our viewers are kind of starting to get an understanding of what this is. But let's back up a little bit and talk about your background. You're 39 years old. You're already a successful real estate investor, a very successful real estate coach. That's actually your main source of income right now. And then you're also helping, partnering with Jack to help people set up these infinite banking accounts for themselves. So you actually started investing in real estate as soon as you graduated college, right?
I did. So I bought my first real estate when I was 22. So I got my MBA and bought a triplex the year that I graduated. I always knew that I wanted to invest in real estate. My grandmother invested in real estate. Mm-hmm. My parents didn't make as many investments, and I saw which one worked out better.
Right. So you're like, I'm going to do that.
Yeah. So my grandmother, she passed last year, but she lived from 1990 until 2023 December on like 8 rental properties that she bought in the 1960s.
Wow.
So I knew that I wanted to get involved in real estate, and the way that I knew to do that was I'm going to buy rental properties. Mm-hmm. Well, at the time I was working at Cadillac. And then when I was at Cadillac, I met a couple named Phil and Shanoa Grove, and they taught me how to invest in real estate the right way.
Wow.
So I joined their coaching program in January of 2014.
Yep.
And then I did my first deal the right way, an investment grade quality deal, an off market deal.
Right.
And I saw, hey, this really works.
Mm-hmm.
And then the next month I had my my best financial month I'd ever had at Cadillac, and I made $27,000 in a month.
Yeah.
The new body style Escalade launched, and I had a great client base for Escalades.
Not bad for at the time. What, at 20?
I was 28, 27.
Okay. Not bad.
And I woke up every day nauseous. I worked for a great company. If you're wired to work for somebody else, they were a great company to work for. Mm-hmm. I just knew I wanted more. So actually 10 years ago this month, I quit my real job, and I've been an entrepreneur since then. So started off in the residential space. So the flipping houses, strategies, wholesaling, using creative financing. By the way, if you've seen the TV shows about flipping houses, those aren't real.
Darn it. My wife's going to be so disappointed.
People ask me about, my flips are so boring. I love workforce housing. I love really stable investments.
Right.
When I flip a house, or if I've got a rental property, my goal is for somebody to walk in and go, looks good. I could live here. I
don't need to knock down any walls or solve any mold problems.
I've solved lots of mold problems. I have solved lots of mold problems, but I've never picked out a backsplash.
Right.
I talked to my realtor and my contractor. I'm like, y'all, just pick what the comps have.
Yeah.
The comparable properties. What's selling in the area.
Right. And
then from there, when you get into residential real estate, commercial real estate is kind of a natural progression.
Right.
It's and I'm always looking for new challenges. So about 5 years ago, I started investing in commercial real estate as well. Mm-hmm. The way that most people invest in commercial real estate is through what's called a syndication, which is a pooling together of funds to buy larger assets. Mm-hmm. So over the course of the last 5 years, I've put together about 20 syndications with some partners. We've bought lots of storage facilities. We're building some apartment complexes, and we're doing things like that. Mm-hmm. And along the way, that personal development journey and that studying wealth, studying about how to grow wealth, I came across, this infinite banking thing.
Right.
And great book, What Would the Rockefellers... I think they had to change the name from What Would the Rockefellers Do because the family didn't like it.
Oh,
so
really?
I think it's called What Would Billionaires Do now.
Oh, that's funny.
But essentially, when you're playing a game, you want to know what the rules are. And you want to watch the people that set the rules and what are they doing. So I want to look at
and the people that are dominating the game.
What are the richest and most powerful people in the world doing? And one of the things that I learned from that book is Cornelius Vanderbilt was the richest man in the world. He was a shipping magnate and then a railroad tycoon. After Cornelius Vanderbilt was the richest man in the world, it was Andrew Carnegie. He gave away most of his money to charity, which I respect.
Yeah.
And then after that was John D. Rockefeller. Well, John D. Rockefeller, oil tycoon. Carnegie was steel.
Steel. Yeah.
I mentioned I'm a huge nerd.
Yep.
I can trace this back further. But Cornelius Vanderbilt was the richest man in the world. His grandson died bankrupt. So if you've heard the term shirt sleeves to shirt sleeves in 3 generations, historically, the first generation makes the money, the second generation spends the money. Or saves the money, and the third generation spends the money. Well, John D. Rockefeller, his family is still one of the richest and most powerful families in the world because they use this tool and they set safeguards around their family, and I've got to set safeguards around myself. We've talked about my policies, and I've got some that are like, hey, dummy, you need to be saving this, you need to be diversifying this, and I've got stuff on auto draft that it just automatically goes through. I don't have to think about it.
Yep.
And I let it grow.
Yep. Forced savings. It's important.
Treat it like a tax.
Yep.
What would you do if the taxes went up? You're going to pay them. You're going to work a little bit harder, and you're going to pay the taxes. Right. So I treat that as a self-imposed tax that is going to be used much better than my other tax money.
Right. Exactly. So what you found in your studies is that these are the kind of things that the wealthy do.
The richest and most powerful people in the world. This is what they do and how they protect their wealth for their family. So one of my favorite quotes is, if you don't come from a rich family, make sure that a rich family comes from you.
Yeah, there you go.
So I want to set up not only myself and my wife and my kids, I want to set a family legacy utilizing this. So the Bible says that a rich man leaves an inheritance for his children's children. For a long time, I wanted to set up my family forever. I'm in charge of 3 generations. Well, I'm in charge of 4 generations. So I'm helping my parents.
Yeah.
I'm taking care of me and my wife. I'm going to take care of my kids, and I'm going to set their kids up as well. Because when my kids, they're going to be young, they're going to be starting their family. So I want to be able to help them.
Yeah.
But I'm going to teach my kids. I'm going to pay for your infinite banking policies. I'm going to pay for your kids' infinite banking policies. You're going to pay for your grandkids, and you're going to teach your kids to pay for their grandkids. And this is just one of the other things that the ultra wealthy families do. And that's part of how you can set a legacy.
Yeah, absolutely. And that's basically essentially what the Rockefellers have done. It's those safeguards that you were talking about.
All of the money pours back into the trust.
Yep. Oh, that's fantastic. It's really powerful stuff. So you actually you already knew that you loved this infinite banking concept when you met Jack Waldron in 2021, and Jack actually signed up for your real estate coaching course, right?
So that's actually how I met Jack. But so I learned about this concept, and I like shortcuts, and sometimes that's a good thing, sometimes that's not the best thing. And one of the things that I mentioned is these policies have to be set up in a very specific way. So I went to my guy that sells me all my real estate insurance, and I said, hey, can you set this up for me? And we set one up, and it was good, but it wasn't optimal.
Right.
All right. So there's good ways to do things, and then there's optimal ways to do things. If somebody wants to invest in real estate and they bought one rental property, in 30 years they're going to have $500,000.
Right.
I mean, if you can, every real estate property is going to be worth $1 million if you wait long enough. I mean, that's just the way it works.
Yep.
There's better ways to do it. So I had this policy And it was good.
It was good.
It was
right.
okay. It wasn't optimal. And I met Jack. He signed up to learn about real estate from me. And I always want to know about people. I'm always curious. I want to know people's stories. And I said, tell me about you. What is your background? And he said, well, I do this financial planning stuff. And I said, oh, is that like life insurance? He goes, yeah. And people that know Jack know that he's insanely successful with life insurance. And I mean, no offense,
sure,
Jack knows more about life insurance than just about anybody I know.
Seriously, he really does. He really does.
And I learned that this is what he does, and I go, oh my gosh, have you heard about this infinite banking thing? It's amazing. And I brag to people that know Jack. I actually pitched Jack Waldron on life insurance
before he could you.
And so we talked about it for a long time, and Jack has a philosophy. I call it long-term greedy. I love cliches. And he's all about a relationship. So you can shear a sheep many times, but you can only skin them once. Well, the good policy I had, I kind of got skinned. All right, I kind of got again.
So there's ways that you can set up these policies as an insurance agent, and sometimes it's through ignorance because they don't know how to set it up properly. Sometimes there is a greed aspect to it where, as you were saying earlier, you can set these policies up to be the smallest amount of life insurance possible for the greatest cash value growth in there, or you can do a little more life insurance. That's going to result in a little bit more money for the agent who is selling that because there's more life insurance involved. So what you're basically describing there is your first policy might not have been optimally designed for your benefit to grow the most cash value humanly possible. And there's several things you can do. It's not just the balance of how much life insurance and how much cash value is coming from your premiums, but also like certain riders that you can put in place that can help that cash value grow even further. So that first policy, good setup, but not optimal.
No bad blood. I'm not
Right.
angry about it. It wasn't optimal, and I'm gonna say I was working with a property insurance agent. They didn't know.
Exactly, and it totally could have been more ignorance, less greed sort of deal. But Jack knows how to set these up in the absolute most optimal way possible, which doesn't necessarily mean he's going to get paid the most money. But as you said, he sees the value. And look, I'd rather talk to more people, set these things up optimally for as many people as possible and keep them as clients and do the right thing.
Yeah. And I mean, he suggested that I get my license. No, I'm not. I'm not worried about it. I'm an enthusiast.
Right.
I'm just going to send you all of my friends just because I like it. And he said, no, get a license and you can get tied in with Alliance and all of this great stuff and all the good resources. But the other thing that Jack does specifically is he puts and this is crucial for real estate investors, is there's what's called essentially a liquidity rider. And what that means is you have access to your money pretty much as soon as you put it in.
Right.
So
you might hear this agents who might be familiar with the balance sheet benefit rider.
Right. So essentially, normally as you're setting up one of these policies, if you don't have that liquidity rider, you don't have access to the money for a year or two. And that's one of the reasons that this has such a, or doesn't have such a negative. It can have a negative connotation if you don't have access to your money. Right.
And this is some agents out there aren't even aware of this rider, or they're using companies that don't even have that rider as an option. Right.
So one of my policies is an investment policy. I can put up to $200,000 a year into that policy. Well, I did a $200,000 deposit and immediately borrowed about $170,000 to make another investment.
Wow.
It was within a few weeks that I was able to access that money. Now that rider has a negative impact on Jack's commission, but he knows that I'm going to do a lot of these policies.
Right. He's smart, and that's where you're tying in.
You have to have the right people.
Right. Yes, it is extremely important, and we always say this when we're mentioning infinite banking. It's very important that if somebody's interested in infinite banking, that they find the right person that has the knowledge and that has the ethics, really, to make sure that they are designing that policy in the absolute most optimal way possible. Can a fine designed policy perform well? Absolutely, but we always want to go for those optimally designed policies. So it is very important to work with somebody that you know, somebody that you trust, and somebody who's very experienced in things like this.
So one of the terms that a non-fiduciary financial advisor has to have is that an investment is suitable. If they're not a fiduciary, it just has to be a suitable investment.
Right.
I can't think of anywhere in my life that I would be happy with suitable.
Right.
Now, there is one area where I think I would be okay with something like that. So on a Rolls Royce where it says horsepower, it just says sufficient, which I think is a very British thing to have. And that's the only area where I would be okay with sufficient. Is when I get my Rolls Royce.
That's awesome. So you actually, the way that you're kind of set up, Brent, is you've got the several different things going on. Of course, you have your real estate investments. You have your real estate coaching business, which is just hugely successful. People are paying, $60,000 just to be coached by you because you have such great experience and such great success. And then you've got, you and Jack are also working together to help people that you meet in the real estate investment world get set up with these infinite banking policies, which is really fantastic. You and Jack have this really fantastic partnership, and you're helping people, which is always great. Why don't you think more people know about infinite banking?
Ultimately, it comes down to our education system is broken. It's our education. Speaking of the Rockefellers, J.D. Rockefeller wanted employees, and that's what our education system was built for. And, in high school, in traditional education, I didn't learn how to balance a checkbook. I didn't know how to write a check. I didn't know how credit worked. I didn't know how anything worked. I took calculus.
Right.
I can't tell you that I've ever used calculus in my life. I'm not an engineer. I'm not saying that there aren't people that need calculus.
Right.
But there's no one that doesn't need financial education. And
everybody needs financial education.
And unfortunately, our society doesn't prioritize that in the education system. And you have to find this on kind of your own journey. So
just like you did.
Exactly. So it's through self-education, and, more people don't know about it because more people don't seek it out.
Right.
We're told, the old go to college and get a good job and, get a pension. That right. I don't even know if that's working for the baby boomers.
Right.
That's definitely not going to work for me as a millennial.
Right.
That system is broken and doesn't work. And you have to have the people that are going through and educating themselves, that are going out and seeking out the
that
knowledge.
information. Just like you did, you described you purposely sought financial education, and you started with the basics, and then once you had read all those basic books, Rich Dad Poor Dad and things like that, then you moved to the next level. And so you were seeking this information, and it really takes somebody who, either someone who is seeking this information or people like you that are reaching out and saying, hey, listen, you need to hear about this. And unfortunately, not a lot of people get exposed to something like that. But you do practice what you preach. You have actually, we talked earlier about every dollar has a job, right? Every policy that you have has a job. You have 3 personal policies, right? First, your infinite banking policy that you're doing $200,000 a year into that policy.
So I actually have 5 policies.
Oh wow! Okay.
I remembered this as we were having our conversation. So, again, just a huge nerd. I set up my first term life policy when I was in my mid-20s. No one depended on me, but it's just like I have a house, so I guess I need to have a term
there you go, man.
life insurance policy.
Very, very astute 22-year-old.
And so my wife and I both had term policies that we started when we were in our 20s, and it's like $50 a month for $1 million policy, and it's just like,
and you have a cheap term policy right now. It was a good move
for an extra $50 a month. My wife can have an extra $1 million when I die.
There you go.
Or if I die early. Right. So the term policies, life insurance is important. If you have people that depend on you, you need life insurance. And if you're at a point that all I can afford is term, you need life insurance. So one thing that I do a lot in my real estate business is I buy a lot of foreclosures. And so many foreclosures are caused an unexpected death. So not only are people not set up with a will or have any plan, not having a term policy puts families in such turmoil. So I mean, I joke about it that I set mine up when I was in my early 20s.
Right.
I guess my parents would have gotten money before. Now that I have a family that relies on me, I need more insurance.
Right.
Just because that's what's important for them. But we have the term policies that are just kind of a bonus. They're super cheap, so we went ahead and kept those. But I have my family has 3 policies. One I use as an investment account. So that one I can put up to $200,000 a year into. Now the beauty is that's the maximum. It's not required.
That's the infinite banking type policy. Yep.
That's the infinite banking policy that I use. And I essentially use that when I sell an asset. I'm successful, but I don't have just an extra $200,000 a year just laying around. I know people that do.
Right.
But I use that when I sell an asset. So if I sell a house or if a storage facility sells, I take all of that money and I sweep it in there. That's also my sweep account. If I have money in my account, I'm going to spend it or I'm going to invest it. That is so. I use them as stupid human tricks. And I keep so many dollars in my banking account, enough to cover, my expenses.
Right.
And then I move that to the infinite banking policy at the end of every month.
Yep.
Because for me, I don't want to see it. I need it out of sight, out of mind.
Yep. That forced savings sort of concept.
Exactly. Because if you see the money in the account, I've got money in the account. Let's go on vacation. Because I love vacation.
Yeah. You're going on a cruise next week, I think, right?
I am. So I'm
should have swept that money, man.
I know. Well, this is a good investment. It's time with family, which is really important. So we've got the really large policy that I can put up to $200,000 a year into, and that's where I make my real estate investments out of. So down payment for a house, or most of my investments are in commercial real estate syndications. So those are normally a $50,000 minimum investment. So I have the money in there. And then when I have an investment, I borrow $50,000 against the account, make the investment, use the cash flow to pay it back, and then restore that policy. So that's my infinite banking policy. I have another policy that I use as a retirement account.
Right.
And this is another stupid human trick. So on that one, I put $3,500 a month into. That is a tax that I've imposed on myself.
Yep.
That it's all auto drafted, so I don't have to think about it. I don't have to write a $3,500 a month check.
Right. You don't have to make that decision every month to keep it going. It happens.
And I mean, quite frankly, that's a larger amount. I mean, it's not insignificant.
Right.
And if I had to write that check every month, I'd be like, oh, well, I could do this instead, or I could. But it's a tax.
Yep.
It just goes away.
Same with mine. Yep.
And then for Trip, my son, who's 8 months old.
Yeah.
He's so much fun.
Congratulations on being a relatively new dad, by the way.
Yeah, and he started crawling, and I'm in trouble.
Oh yeah.
I think this dad bod is gonna go away from chasing him around. But we have a $1 million baby policy is kind of the nickname that a lot of people refer to.
A permanent cash value life insurance policy on an 8-month-old.
Exactly, and he didn't qualify based off of income, even though I pay him for his modeling services. He didn't qualify for $1 million or $200,000 a year policy.
Right.
I talked to Jack and I said, "What's the most I could do?" And we're able to put $500 a month in for him. And
that's just taking advantage of compound interest over time. Get that started when he's a tiny little tyke and let it work its magic over the years.
It is insane. It is absolutely insane how compounding works. And again, I'm going to geek out here. So there's, again, you look at different policies or different types of accounts. And, when I started this journey of infinite banking, I looked at different retirement accounts for myself. So I looked at solo 401ks. I looked at Roth IRAs, which are great, but they didn't have, I didn't have access until I was 59 and a half.
Right.
And I was capped at how much I could put in.
Yeah. As soon as you start making, I forget what the limits are.
I think it's $6,000 a year for an IRA. I think.
Yeah. And what
you're also
and
capped
once
at
you
like
make above a certain income.
$170,000. You can't contribute.
Exactly.
So
Yeah.
I can't contribute to those. There's ways around it. There's ways that you can do it.
The backdoor us and things like that. Yeah.
Yeah, but when I looked at the accounts, the infinite banking policy for a retirement account is what made the most sense to me. And then, you know, if you don't come from a rich family, make sure that a rich family comes from you. So I want to make sure that my kids are all set up. My parents were incredible. I love my parents. They taught me such incredible values. They didn't have the financial education. So I'm carrying, luckily I had a lot of scholarships.
Right.
But I still have my student loans that I'm paying, and I want to make sure that my son doesn't have to worry about that.
Right.
So I looked at Coverdales, I looked at ESAs. Those are capped at how much money you can put in, but you're also very limited on what you can use the money for.
Right.
And, you know, I have a master's degree. I value education. I don't know if education is going to be, I don't know if traditional education is going to be right for my son.
Right.
I mean, I don't know what he's going to pursue.
What his path's going to be. Maybe he starts his own business right out of high school, or, you know, I don't know, becomes a rock star. Or, right?
Whatever he wants to do. Maybe he wants to be an investor. Now, maybe he does want to go to college.
Right.
I mean, I want him to go to West Point, so he's not going to have to pay for it. But I'm not going to make those decisions for him.
Right.
But this $500 a month policy is projected to be $240,000 when he's, I think, 22. So he can use that to pay for college. But if he doesn't want to go to college, then he can buy a house. Right. He can start a business. He can, and I mean, at that point, he can invest in 5 different commercial real estate syndications.
Yeah.
And grow his money that way. So he has, it's choices that he has. And I've said for a long time that, you know, or when I set the policy up, I said, and, you know, as soon as he's 22, if he wants to take over the $500 a month payments at 65 or 64, 65, it's like $6.4 million.
Yep.
Now, my wife has informed me that I'm making the $500 a month payment until he's 65.
Yeah.
I was on the mindset if he takes it over, but my wife has informed me we're
maybe
paying
until he's
that.
30 and he gets married and he's responsible enough to not, you know, blow it all on beer money or something like that, right?
Yeah, and one thing I do want to say is don't compare your starting line to somebody else's, you know, they've been in the race for 10 years.
Right.
So that's when I say I've got a $200,000 a year policy or I've got a $3,500 a month policy. Not everybody can start there. I'm very blessed. I've worked very hard.
These are very large policies, and that is something that I wanted to talk about. This isn't just for the very wealthy. It's you know, infinite banking is not just for the ultra rich. Tax-free retirement. You know, your $3,500 policy. You can do, you know, amazing things with $150, $200, $250 a month if that's where you need to start, right?
Yeah. So you can start at any size. Now, obviously, the goal is to get ultra wealthy. That is obviously the goal.
Right.
But I mean, we talked about, you know, this isn't a one size fits all. This can be whatever fits for you. And we talked about the term policy was good at the time. It did its job.
Right.
So even if you're just starting looking at, you know what, I want to work a 9-to-5 job. I want to be normal. I want to have a normal life.
Right.
You know, if you start saving $200-$300 a month in one of these tax-free retirement accounts, you get amazing. You get the death benefit for your family,
permanent life insurance, which is something for sure.
And then you get the living benefits. So if you get sick, again, the biggest causes of bankruptcy and foreclosure are death and sickness.
Medical bankruptcies, absolutely.
So you've got to take care of yourself and you've got to take care of your family, and it's a great savings account. Now, something else that I learned from Tony Robbins is he calls it pay yourself first or pay yourself later. And essentially, if right now I can save $200 a month, okay, lock in your lifestyle where you are right now.
Right.
And as you get older and more successful,
you're going to make more money.
You're going to make more money. Pay yourself first before you increase your lifestyle. I'm not saying don't increase your lifestyle. I mean, that's why we're not trying to just get the biggest bank account. We want to do the stuff you can with the bank account.
Increase your savings before you increase your lifestyle.
Exactly. And then continue to grow. So for the infinite banking policies, I would set a goal to get to where for the infinite banking, not just the cash value life insurance, not just for the tax-free retirement. That's one type of account. For the infinite banking, I would say try to get to $1,000 a month as fast as you can. That would be, I would set that as a goal. And, you know, for my entrepreneurs out there, just make an extra $1,000 a month.
There you go.
That's I hate to be cliche, but I mean, if you're an entrepreneur, grind a little bit harder.
Yep.
Make the extra $1,000 a month and pay yourself first.
Yep.
And if I didn't live that, I wouldn't be telling you that. That's kind of an asinine thing to say if you haven't done it.
Right.
But I mean, if you're an entrepreneur, you can make an extra $1,000 a month.
Grind a little harder, right?
Yeah. So, and essentially what that does is I like to batch down big goals. So I mentioned, you know, for a real estate syndication, the normal minimum investment is about $50,000. Okay, so I want to think, how do I get $50,000 if I don't have it just sitting around? So I break that down into, you know, $5,000 a month gets me there in a year, because there is the cost of the insurance in there as well.
Right.
But if I can put an extra $5,000 a month, that gets me that $50,000 in a year. If I can't do $5,000 a month, $2,500 a month gets me in 2 years. $1,000 a month gets me in 5 years. So that's why I break it down to make it a goal to get kind of that $1,000 a month. And again, you don't have to.
Right.
And then of course, if you do have the ability, you know, I work with a lot of very, very successful people. If you do have the ability to put in $50,000 or $100,000 or $200,000 a year, you're just going to get that compounding much faster.
Absolutely. Yep.
But again, this isn't just for the ultra wealthy.
Right. You can start. You can start in a much more, you know, modest plan, and then grow as your income grows over time. But it's not just the infinite banking. This also applies to your tax-free retirement type policy. You know, permanent life insurance. Infinite banking is great and it's wonderful, and it's that kind of supercharged solution for people who have the means for that. But for people who might not have those means yet, you can absolutely, you have your tax-free retirement policy, which you know is going to help generate income for you for retirement. And you can start those for even less, you know, $300, $400, $500 a month.
And for me on that particular policy, that's the one that I put $3,500 a month into. It's a diversification play for me. I don't personally have funds in the stock market. I might have like $500
Sure.
in like a Fidelity account that I set up years ago, but
Right.
I have very little traditional exposure. I'm very, very heavy in real estate. For most people, I wouldn't recommend my portfolio.
Right.
That's not what I would recommend. I'm very diversified within real estate, within my real estate portfolio, but I am heavy in real estate. So that $3,500 a month, I intentionally told Jack, do not give me liquidity. I want to pretend like that money is gone.
Yep.
It's not. It's growing for me.
Right.
And I reached out to the life insurance agency the provider that has it, and I said, hey, can I not see this in my app?
Wow.
I just want to, I don't want to see it.
You don't want to see it. It's just let it bake.
Yeah. So, and again, I have an investing problem, and if I've got money, I want to put it into an investment. But this is a diversification play for me.
Yep.
It gives me market-like returns. It gives me some exposure to more traditional investments, but it's got incredible security.
Yeah, it's that 0% floor. So it's tied to the market. It goes up when the market goes up to a cap. If the market goes down,
yeah,
you don't suffer any losses. Zero's your hero.
Exactly. So I love that security in it because, you know, I consider myself a very, very boring investor. And I say that I have a very, very low risk tolerance. Now, compared to the average person, I've got a very high risk tolerance because of I invest in private placements.
Right.
But the private placements that I invest in are storage facilities and affordable housing. It is not sexy investments. Yeah. It's not exciting. We did a property tour a couple months ago, and I put a storage facility on our property tour, and we drove the bus through the storage facility, and I'm like, well, do y'all want to see one of the units? And they're like, yeah. And I was joking. I was kidding. So I got off the bus and I opened the garage. It's like, a garage. And people got off the bus to walk through, and they're like, oh, is it? And I'm like, it's a metal box.
Right.
That's
funny.
So anyways, I'm very into stable investments.
Right.
And that's what I love about this tax-free retirement account is I've got a floor. I don't like to gamble. I
don't like to lose money.
It stresses me out. Like if I do like to play craps, all right, but I like to play craps and I'm paying to play craps. I'm not gambling.
Right.
But if I win
great
at gambling, I'm relieved. I'm not even happy if I'm gambling when I win. I'm relieved. And if I lose, I'm mad.
Yeah.
So I don't gamble. It's not something I enjoy.
Right.
So for investments, I'm not going to I don't swing for the fences in anything that I do. I want
Go for the singles and doubles.
I want singles, doubles, bunts, stolen bases. Like I want just very secure, steady investments is what I look for. And that's the diversification that I was really looking for in that particular policy.
It's awesome. So it's so interesting, Brent, just to your background, how you discovered infinite banking, and you know that you're helping folks. So you and Jack, if there's anybody watching this who might be a real estate investor, who might be interested in learning more about what you're doing, what you and Jack are doing, they can reach out to you just via email, right?
Yeah, that's the best way.
So bmott@bowtieinvestments.com. Reach out to Brent, but also if you are looking to be coached in real estate, or really anything that somebody might want to talk to you about. If you've heard anything on this podcast that interests you, Brent, you're always available for a conversation.
If you just want to geek out and talk about wealth, I love talking about it.
Brent Mott from Bowtie Investments, thank you so much for joining us, man. Amazing conversation. We're looking forward to shooting some content here in the studio today with you, but it's been fantastic having you on the Alliance Group podcast.
Thank you for having me. I appreciate it.
Listen to this interview and more on the Alliance Group podcast.